the loans. Now, Cameco made it clear they had put standby loans in place years ago. And we can speculate on who those are with. I think I have a pretty good feel. Some large Asian utilities that don't have near-term needs. But it's interesting, they then lent to Orano. So, I mean, you've got to kind of watch that whole process. There is interest in loans, but as we know, they have to be replaced, normally with physical, but some of them have financial settlement. So in other words, we get out 3-4 years, maybe the material isn't there, or I can do it financially.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. My guest today is my dear friend, a uranium and nuclear energy veteran with 50 years of experience in the industry, Mr. Dustin Garrow. Welcome to the show.
Well, pleased to be here. It's been a little while since we've had a chance to talk, although we saw each other in London, and a lot going on. So, I mean, there's a lot of new territory almost to cover.
Couldn't agree more. And probably the biggest one and the most recent one is that the uranium is now a U.S. critical mineral. That's my first question. What will that mean for the industry, and how likely is the scenario where utilities let the government do their buying and rely on them for supply? I know it's not a okay. You can answer it.
Okay. Well, I think as a general statement under the new Trump 2.0 administration, we're seeing not just government support, but we're seeing, I guess let's call it innovation. I mean, look at the Cameco-Westinghouse agreement that they just entered into for $80 billion to build 10 reactors. And the U.S. government will be bringing the financing into it. Now, people, I think, are assuming that that's U.S. government taxpayer money. What it looks like at some of these countries, as we know, the Middle East, I think 3 of them made very large commitments to invest in the U.S. Recently, Japan, South Korea. So it looks like the funding will come from outside maybe the United States. And so the Trump administration is being very vocal about the need to onshore nuclear. I mean, it's reactors, it's fabrication, it's uranium conversion, enrichment. We're seeing, for example, new enrichment suppliers. General Matter, I think it was, gave a presentation in Charleston. So we're seeing new potential players, but the sense in the industry, and I was just at the Charleston conference, was if the utilities were still kind of the primary driver, we wouldn't be seeing this happen because they are, let's say, more hesitant to support even new reactor build. As we know, after Vogtle 3 and 4, they're saying they like to operate the plants, but they're really not too keen on getting involved in the construction side. So it gets back to kind of your question. Will the U.S. government take equity in the fuel cycle? Could. I think the UEC proposed conversion plant, I think they're looking to the government to kind of be involved. So the point is, and it was brought up in Charleston, one of the panelists said what he's seeing is, nuclear future shock. So those of us that were around in 1970 when the first Future Shock book came out, it's accelerated change in a a shorter time frame. And some people have trouble dealing with it. I mean, it's and now I think we're seeing it in the nuclear space. And it's the data centers, it's the restart of reactors that were being prepared for decommissioning. It's the SMR situation. And again, I think what is really become a real strong stimulus has been, presentations like the UX presentation in Montreal, where Jonathan Heinz said there's not investment being made in significant components of the fuel cycle, not just uranium, but conversion and enrichment. Now, Urenco has announced expansion, and we may kind of get back to their business model. But I think, again, what we're seeing, and the other is WNA, the annual symposium, the market study, which normally is interesting, but not, let's say, too motivating for the industry. But for some reason this year, and I think it's because they took a much more, I think, optimistic view on the demand side. And if you look at their scenarios, the uranium gap, which used to be kind of a sliver that ran out, and that was unspecified supply. We don't know, and maybe it's inventory, maybe it's somebody expands production to fill that. Well, now the gap is monumental. I mean, it overwhelms existing production forecast in the study. And the other thing that was interesting is that the Nuclear Energy Institute that sponsored the conference in Charleston invited the WNA, the project manager, to come over and give a presentation on the market report. Now, again, why is that important? As you know, having been in London, the U.S. utilities are not a big part of the participants. 4 or 5, maybe, of the big ones, Constellation, Duke, Southern. But the conference that was held in late October was primarily U.S. And so it was, I think, an opportunity to show that group the outcome of the market study, which I think really raised the issue to a much higher level. So I think, I'm a firm believer in confluence of events. And so what we're seeing is just a lot of different factors coming into play. And that's why I think the U.S. government involvement is not something we've seen before. I was at the half-day conference in July in Washington, and there was a representative of the Bureau of the Interior. Now, keep in mind, in the West, the Western U.S., there are massive holdings of land by the federal government. And this representative said, hey, under the Trump administration, please bring us your proposed projects because we will process them much quicker than you've seen in the past. And so that, he said, basically have a defendable business plan, and it's got to be legal. I kind of like that. Well, yeah, of course. So, I mean, we're seeing it not just, we're going to make the Nuclear Regulatory Commission a little more efficient, and they'll try to be a little quicker. It's across all aspects of nuclear.
Yeah.
So, and I think other countries are now also seeing that, well, if the U.S. is doing it, we better pay attention. And so, I mean, it's just become a really crucial factor in let's call it jump starting, in getting nuclear moving forward. And again, that was a discussion point kind of as coffee talk, as they call it, amongst a number of the participants in Charleston, that, hey, the fact that the government is now becoming so involved is viewed as a big factor. So,
Yeah, Dustin, in 7 weeks, we will be only 2 years from prohibiting Russian uranium law taking hold, and that's about the same length as one fuel cycle. As
Yes.
such, will we see a procurement changes beginning in early 26? Will this
Oh, I
result in
think
overfeeding at Orano or Renko? What's your take?
I think we've already seen that going on. I mean, it's been gradual, but as I've been told or cautioned by my contacts in the Russian industry, those contracts start to drop off anyway. So the annual volumes are less. Some of the utilities decided they didn't even want to pursue waivers. They said, it's just not something that's worth us spending the time and the energy. And, part of the program to get waivers is they're supposed to identify which utilities. And some of the utilities didn't like that. They wanted to be part of the group. But then if the government is going to say, okay, here is the list, they didn't want the potential public relations fallout from that. And the other is I continue to hear that the Russians are short seed material. And so they probably won't be able to deliver everything in the next 2 years anyway. So it's interesting at the conferences, the Russian situation really wasn't brought up. There's been some talk about the Chinese increasing their exports, and I think the Trump administration is looking at that seriously. But yeah, the Russian sanction delivery issue just has kind of gone to the what we'd say the back burner in the industry. Um, the idea of Urenco overfeeding, I'm not hearing they're doing much of that. That's a nice thing for everybody to talk about, but it's not really a big factor in the market. Again, they're a company that doesn't want to upset too many people. They don't see the need to bring material into the spot market. You know, just again, you mentioned Urenco earlier. I've known them for 40 years, however long it's been since they started up, and their business model has always been when the industry, the utilities step up, sign long-term defined price enrichment contracts, we will then build the capacity. The idea, Cameco continually says they won't front run the market. Urenco's done that for decades.
Yeah.
In other words, when the market calls for their service, then they'll go ahead and sign contracts if the contracts are at sufficient prices
Yeah.
To bring on new capacity. And that's an issue. Just one of the panels in Charleston, it was the last one, What Keeps You Up at Night? And it was interesting. It was a varied group. But John Donaldson from Centrus, the U.S. enrichment supplier, who he said he's been there 30 years. I mean, I knew him when he was a fuel buyer at Virginia Electric before that. But he kind of made it, the comment. He said, well, the prices have gone up across the fuel cycle. Yes. But he said they are only at a level that will support the operation of current production facilities. And his comment was that we are well short of the prices needed to incentivize new capacity construction. And so I thought that, that was pretty interesting comment from Centrus. So anyway.
Yeah, totally. Dustin, I want to hear your take on spot market, especially on the big boys buying at the spot and borrowing to fulfill their commitments. Do you believe that will have any impact on the supply demand modeling on the spot market?
Um, Yes, I think the loans. Now, Cameco made it clear they had put standby loans in place years ago, and we can speculate on who those are with. I think I have a pretty good feel. Some large Asian utilities that don't have near-term needs. But it's interesting, they then lent to Arano. So, I mean, you've got to kind of watch that whole process. There is interest in loans, but as we know, they have to be replaced normally with physical, but some of them have financial settlement. So, in other words, we get out 3-4 years, maybe the material isn't there, or I can do it financially rather than with physical. Um, yeah, Cameco, based on their call, seemed to be kind of minimizing their expected spot market purchases, which is fine. I think the market, again, as we move past the Sprott mini phase, let's call it that, which was substantial. They bought a lot of pounds, but as soon as they backed out, prices kind of started to, drift down a bit. Yellow Cake, I still work with them, and we triggered the option with the Kazakhs, but that's kind of off market. I mean, that material they wouldn't have brought into the market anyway. Um, the spot seems to be settling in that 50 to 55 million pound range, which is more, quote, normal than we saw the 102 million pounds and all of that. So spot, as most folks have said, volatility around a slowly rising price curve. And that's what we see. So, as you well know, there won't be much supply brought on based on the spot price. It never is. Now, there are those UEC bringing on Christensen Ranch, Irigaray, have said they plan to sell output into the spot market. Won't be a lot of material, so I'm not too concerned that it's going to, put downward pressure on it. But yeah, any new big facility, the history of the industry is such that, I've heard people say, well, the price gets to, 90. Well, then people will just start bringing on no, that's all driven by the term. So we won't see a lot of, now if you're in operation, you could produce a bit more. The price is high. That's fine. But even when the price went up, how many, 20 years ago, there wasn't any additional production because everybody that was operating was pretty much operating flat out to keep their costs as low as possible. So even when the price went to 130, you didn't see 20% more volume produced. I mean, I didn't even remember seeing much at all. So, and we've talked about it. You hear it a lot. The spot market is the spot market. It's got different participants. It's the producers and the utilities rarely participate in the market. Not that they shun it totally. Cameco does. But, there are others that come in, but it's never big volumes from let's call it the fundamental players. It's the finance, trading, these guys buy now, sell later, bring it back here and there, make a little margin, you know. But again, you notice that some of the traders have signed term contracts with some of the new producers. And, my experience there is you have to be kind of cautious. The traders aren't going to consume that material. So it will come back in the market at some point. So you just need to keep that in mind that if you sign a contract with big options, you just need to work that into your business model. Let's put it that way. So
Right. No, I hear you totally. However, are you a bit surprised about the amount of pounds that are appearing on spot market and they are available? Whatever player is here, he can get it actually right now.
Well, yes and no. I think that first of all, the UX inventory study of now 2 years ago, I can't remember, started losing track of the dates when they said, the era of excess inventory is over. And I think that's true. I'm still hearing that the market doesn't have, a lot of excess material, which it always did. You were always able to go in the spot, buy 500,000 pounds, buy 1,000,000 pounds, do location swaps here and there. So that inventory, what I call kind of lubricated the spot market. I think some of the participants stay out of the market. They may, decide that we're not going to um, participate in the in that day-to-day kind of heated market at times. But there seems to be enough that, although I think Sprott has said if they came out, I mean, their big buy was 650,000 pounds, kind of the first tranche, and then they went to much smaller. And I see UX has now changed their definition of the spot price, that it used to be lots of 100,000, and now they're seeing more and more lots of 50. So they've now said, well, we'll now take into account the smaller tranches. The traders, if they've called the market, they make a small margin. They'll buy, they'll sell, they'll come in, and that's how they do the market. But I mean, I don't again see it going up to, very large volumes
Okay,
in the future, because that you have to have excess production.
of
And I
course.
don't think we're going into a phase of the market of excess production.
Yeah, yeah,
So,
totally. Totally
yeah.
agreed, definitely. Dustin, let's touch on the utilities. Do you see 2026 as really a year where utilities will step in and buy much more uranium?
Yeah, I think that and I'll address the term side. They may buy more in the spot. Who knows if they can't find the material, available in the near term market. But yeah, the discussions I've had with several of them is, I need material starting in 28, 29, and I think they're hearing what the supply side is saying, what the financial industry is saying, what the consultancies are saying, and I better get out there and start looking because as a trade tech has reported, some have come in the market for small volumes, just kind of testing. They don't like the price, so they step back. Then they come in the market again a little later. The price is higher and there are fewer sources. I think we're starting to see a market, say, between now and 2030, 31, where there's not a lot of uncommitted term related production. Certainly with the issues with greenfields, which we can talk about because we're, I think, moving into a phase of the market where greenfields developments have to be part, let's say, of the discussion. Wouldn't surprise me if the utilities, again, I've talked to some and they've said, hey, I've got data centers coming in, I've got this, I've got that. We could see them before the end of the year. Late 22, after the invasion, November, December of that year, we had a number of the larger U.S. utilities put out requests for offers. One of them did it on Christmas Eve, which I thought was really uh, inappropriate. But anyway, so I think we could start to see it. Certainly, may in the first quarter, they'll watch the price, and the price after months of quote stability is starting to gradually move up. Now, again, I've been cautioned that that price is as kind of a benchmark for a whole spectrum. And that's one thing that Jeff Geringer, who was on a panel on bridging the uranium supply gap, which that was interesting that the NEI put that on there. like he said, the market's becoming more complex. And so he's trying to stay involved almost on a daily basis to where some utilities won't do the old, I'll come out, do a 5-year contract that starts in 2 years, then I'll go away until that kind of comes up to our, some of them are realizing you've got to be much more active and proactive in the market. So I think we're going to start to see that. But yeah, I think we'll see. I mean, let's face it, the UX year to date term volume of 50 million pounds, that's pretty light. So the utilities, and I just looked at the DOE Energy Information Annual Uranium Market Report.
Mhm.
And, US utilities, now this was as of the end of last year, but they haven't done much this year. 28, 29, 11 million pounds a year in aggregate unfilled. But when you get to 2030, it jumps to 20 million and goes up from there. So it's a pretty big component of the market. Let's put it that way. And so I think they really now still looking at enrichment, conversion, all of that. But now I think they have to spend more time on uranium. So
Yeah.
yeah, I think we'll see between now and the middle. If we end up in Monte Carlo in April at the next conference, which I thought was pretty interesting, and the market is still under 90. But as Trade Tech has pointed out, there have been recent term agreements with a hybrid pricing model that the defined price component is close to 90. I know who it is, but they're at 88, 89, 90-ish. So,
Yeah.
it's not just everybody selling at 84, 85. Depends on who you are and what what your source, where it sits,
Yeah.
basically.
Do you think that the utilities think that they will get a hand of the physical material that is held by Sprott? They have more than 70 million. Yellow Cake 22 million, if I'm not mistaken. Do you believe that they think they will get a piece of that?
Well, I think some of them, you can't do a blanket statement, are looking at that and saying, well,
Yeah.
in the case of Yellow Cake, I mean, we started out at $21, and I think our acquisition cost is certainly well below the current spot. Do you start? I mean, I've been asked that question. Do you start selling into the spot to capture some of that gain? Do you become a term supplier? Do you go out in the market and say, "Hey, I'll do a 5-year contract at some price"? So they're thinking about it. I think they're trying to determine what sources might be available. But I think Yellow Cake and Sprott have made it very clear that both sequestrers are pretty well convinced prices will firm from here. Now, if pick a number, the price gets to 130.
Yeah.
Do those two groups say, well, okay, maybe it's time? I don't know that. That's again, that gets back to future shock. Things are changing quickly in a shorter time period. What you say you won't do today, do you do it in 6 months? I don't know. Could. So we'll just have to wait and see.
Definitely. Let's touch on the greenfield projects. You mentioned them. How do you see greenfield projects in this landscape going forward? And what projects do you see as a project that will contribute to the uranium supply?
Okay, so now let me be on the defense side for the utilities. If you really look at the greenfield uranium development chronology, the last big one was Husum,
Hmm.
2016, 2017, and that was all China. So then before that, I think it was 4 Mile, a satellite to Beverly. So not You know, some people are saying you have to go back to Langer, Heinrich, and Kalakura, 20 years ago almost. And a lot of the fuel managers are post Fukushima. They came in the last 15 years. I heard one of them, big utility, say that they've been in fuel 6 years. So they've had a experience of a market with abundant fuel post Fukushima. And all the sources and why that was happening. So when Greenfields developments came up, as we moved through the restart phase of the market, a lot of them said, well, wait a minute, you've got to give me a really big discount for me to take the supply risk. They were asking for discounts on restarts. And as you know, it's like the infrastructure's there. But that's where we get this range on the term market. When it was stuck at 80 for so long, some of the restarts were selling just below that. And then we had some activity, as you know, in September by Greenfields.
Yeah.
Now we're leaving DASA aside. I think that's been, they've had to change the business model to build a processing plant and all of that. So, but a couple of RA Energy and Bannerman announced that they'd done term contracts. Now you can debate the prices. Maybe most Greenfields developers would say, no thanks.
Yes.
But I think as we move forward now, the restarts are pretty much restarted. When you really look at it, they've got some ways to go. I think they overpromised and underdelivered, but that's in the excitement of it all can happen. But now the future is greenfield development. Okay, in my view. On the Cameco call, there were questions about Rabbit Lake and is that the next source? Not knowing anything, my view is if I'm Cameco-Westinghouse, I leave that on the shelf because as my reactor sales hopefully play a dominant role. This is the reactor market is for Westinghouse to lose. They're getting support from the U.S. government. They've got support. They're selling these things all over the place. Well, as you know, when you sell a reactor, you've got to provide the initial core, and that's 2 million pounds. And in the way distant past, I know the reactor vendors wanted 10 years of reloads. In other words, we want our fuel used to make sure the unit operates according to the whatever. Now, is that going to change? But if that were to hold true, an AP1000, that ties up, I calculated about 8 million pounds. And you're out there selling 10, 20, 30 of these. Well, I don't think Westinghouse is going to go, say, to the Kazakhs to buy uranium or contract for it. So I think, and nobody asked this question, but I think Cameco's role in the market will change going forward. They will be the full service fuel, the provider first to Westinghouse, and then to, non-Westinghouse or other utilities. So, we'll have to wait and see. But everything else, everything from a little ISR guy that says he'll produce 1 million pounds up to next gen, all Greenfields developments, Denison, you run down the list. And those that could come on between now and let's pick 2030, Deep Yellow, at Tumas, 3.6 million pounds a year, depending on when the FID, the final investment decision, is made. They've had some management changes. The other is Bannerman, another 3.5 million pounds at the end of the decade. So, and that assumes ramp up goes well and all of that. And then you get into the, Denison.
You forgot global. Global Atomic.
They've already committed a lot, I think, of the initial material from DASA, and that they've got a number of term contracts. Certainly not 100% committed. I think they've been cautious.
Yeah.
But there's still some geopolitical issues around that. I think technically there's nothing wrong with the project. I always kind of liked it, and I liked the management group and the marketers and everybody. But I think the geopolitics still makes it a little uncertain, not overwhelmingly. Mauritania, the CEO, managing director, just resigned, and the word on the street was that first contract kind of set a bad tone. The terms were $60 floor, ceiling below 100, and where the ceilings are noticeably above that, and they have been. So, I looked at that project a long time ago, and there's issues of geopolitical, social uncertainty, let's put it that way, and all of that. Again, it might be a good technical project, but we'll see. So there's not a lot of greenfields projects that can even come on between now and 30. Next gen, I'm hearing all kinds of things there, and you never know. I mean, there's rumors of them being taken out because it's so big, and it's pretty well understood that some of the big players that now look at the market and say, hey, we need more production, do they come in? I don't know. I can't speak for management at NextGen, but because it is NextGen, that creates its own set of challenges and uncertainties, I think.
Totally.
So, but yeah, it's pretty clear when, if you believe the WNA forecasts, production on their reference case needs to be 390 million pounds in 2040. And then if you believe the uppercase, it's 530 million pounds. You're not going to get that out of existing facilities, particularly in the Kazakhs. They keep slapping up their depletion curve, and they're going, hey, look at this. They've not been doing a lot of grassroots exploration. Couple of other comments. The industry is beginning to realize you've got to do grassroots exploration. A lot of the projects are identified in the 70s, maybe the early 80s, have kind of come off the shelf. Somebody now controls them. Well, they've got to, do more drilling. They've got to do feasibility studies. They've got to permit, finance. I mean, on and on and on. So just because you've got an identified deposit, you are significantly away from yellow cake in the can, which, I like Cameco's comments. The utilities can't burn a stock certificate. They've got to need yellow cake in a drum. So, but going forward, I think US, we have 6 producers now, either in production or close to it. Do we get, UEC is saying we could get to 20 million pounds a year, with the support of the government and the utilities, and, but it's not going to be probably 40 like it was in 1980 because all the conventional mills. At some point also, I just thinking about this yesterday, is conventional. There's a lot of ISR, but for example, Australia, I've been told the geology is not widely amenable to ISR. Sure, you can do it in certain areas, but it's like Kazakhstan. If they weren't ISR, they would have never been able to build enough conventional projects to move forward. But the future will be more, open pit, low grade, ore sorting, on and on and on. So I mean, the utilities, their approach was, again, if you've got a Greenfields project, you have to show me a lower price to incentivize my participation, when in fact the cost curve is going up. So, they're, I think, gradually coming to grips with that. So,
Yeah, Dustin, I have like 10 more questions, but for now, I will
okay.
let you go. This was a great interview, great overview, and insights from you as always. Dustin Garrow, thank you very much for joining me today.
Quite happy to, and maybe we'll reconvene before the end of the year. You never know.